So if you guys want to learn how to trade options, purchase my ebook located at wordly41.gumroad.com. Link will be in the description below. And basically, how did I make $513 trading XYZ call options? So 507. So basically all of these entries were today. So this was more of a day trade. And at 13:24 I got in. So 13:24. So this candle right here. So basically what I did was I bought a couple of XYZ call options as soon as it landed on the 9-day moving average. And then 13:41 I bought 16 more call options. So 13:41, which is this candle right here. And basically I just waited to see if XYZ could hold itself on the 20-day moving average, and if it couldn't, I was like, okay, I'll just basically buy a couple of more call options if it decides to break the 20-day moving average. And once it approaches the 50-day moving average, I'll buy more XYZ call options, and that's what I did. And then at 13:57, so within that same candle, I bought more call options once it kind of dipped below, slightly under the 50-day moving average. And then let's see, 14:07, which is this candle right here. So basically you can see that the 14:30 candle couldn't hold itself well on the 50-day moving average. It shattered that support and it went below, and then it approached the 200-day moving average. Once I saw the opportunity that that XYZ is approaching the 200-day moving average, I bought more XYZ call options as soon as it landed on the 200-day moving average. And then at 14:09 I bought more call options on XYZ, so within like 2 minutes. And then once I sold out the position, I sold out the position at 14:36. So basically this candle right here, not this one, but this one, the E15 candle, I sold my entire position of XYZ call options. And once I sold out the position, I made an easy gain of $513 trading a couple of XYZ call options. So it's basically what I've been telling you guys, right? Try to use the moving averages as your support or resistance levels, or try to use your moving averages as either indicators as entry points, whether you're playing calls or puts. This is like a prime example, like I just showed you guys, right? Steadily I kind of wanted to analyze, not analyze more so, but more so wait patiently and see if can XYZ hold itself on the 20-day moving average? Can it hold itself on the 50-day moving average, right? And basically I was just patiently waiting to see if could it hold itself on those moving averages. If it couldn't, I would just patiently wait and see if it could approach the other moving averages below it. And so that's what I basically did. And so in a way also, you kind of want to pay attention to your to this where it says 10.48%. Basically try to aim for your percent target that you want to sell out your position out of. So if you want to aim for a 20% gain, okay, try to have a game plan, right? Try to analyze the chart. Is it in an uptrend? Is it in a downtrend? Is it holding itself on the moving averages? Is it getting rejected by the moving averages, right? And then try to aim for whatever your percentage target is. Now if you're swing trading, that's a different thing, right? You can if you're swing trading, you can aim for higher percentage targets, right? But for me, since this was a day trade, I usually just stick to only, I only stick to aiming for 10 or 15% targets if it's a day trade. Now, if it's a swing trade, I try to try to aim for the same targets as well, either 10 or 15%. Usually, if I'm feeling confident, like I said, I'll try to aim for a 15 or a 20% target. But sometimes, whatever my risk tolerance is, I'll try to aim for a higher percentage target rate, and I'll just go from there, honestly. So usually, what you want to do, right? It's like I said, right? Let's say you played XYZ, right? And let's say you bought here on the 1430 candle, right? Let's say you basically bought XYZ call options on the 50-day moving average, right? And you say, okay, I expect a bounce here because the previous candle used the 50-day moving average as support. So I'm pretty sure here on the 1430 candle, XYZ is going to bounce off the 50-day moving average. But then all of a sudden, XYZ decides to break the 50-day moving average. What's the next move from here, right? Basically, what you would want to do is basically wait if, can it approach the 200-day moving average? If that does happen, right, I would basically buy another couple of XYZ call options, right? That way, in case XYZ decides to rebound, right, and use the 200-day moving average as support, then that way, when XYZ decides to go up, my position will be in the green a lot more faster than where I originally started at. So basically, try to use your your moving averages, or try to use the moving averages as your as your entry points, and also as like your support or resistance levels, and try to aim for your ideal percentage target rates. Usually for me, like if I'm having like a really bad day, or like I'm feeling like the market is not, it's not looking so good, or there's maybe my plan isn't set to execute this same day, right? I'll try to aim for smaller percentage targets rates. So basically, I'll try to aim for a either a 5% win rate, or I'll try to aim for a 10% win rate. So once I feel like, okay, the market isn't looking so good, I'll just try to aim for those two main percentage targets, because I feel like the market isn't doing very well. I feel like it's a little shaky. So try to use the moving averages as your support or resistance levels, or as your indicators as to where to get in and where to get out. And like I said, if you guys need any help, DM me at StevenFinance1 at Instagram. And that's pretty much it. As always, this is not financial advice. As always, take care and bye.